Welcome to Talk Tickers. Today, we are digging into Fulton Financial's fourth quarter 2025 earnings call. We're going to get into the numbers, the narrative, and what it all means for the stock going forward. All right, here's how we're going to break it down. We'll start with the headline numbers from the quarter, then get into management's strategy for 2026. After that, we'll zoom out to see where they fit in the bigger picture, and finally, we'll give you our rating on the stock. So first things first, how did the numbers stack up against what Wall Street was expecting? Well, it was a bit of a mixed bag, but what's really interesting is how the market took it. And spoiler alert, the reaction was pretty good. Okay, so on the bottom line, earnings per share, they crushed it. The street was looking for 49 cents, but Fulton came in with 55 cents. That is a solid 12% beat. Now, on the top line, revenue was a hair short of expectations, but honestly, the market completely looked past that, focusing on that big earnings beat. And you can see the market's verdict right here. The stock popped almost 2.6% right after the numbers hit. Now look, this wasn't some massive surge, but it was a clear signal. It tells you investors were more than willing to forgive that tiny revenue miss because they really liked the strong profits and the story management was telling. And this slide, this really shows you the health of the bank's core engine. That net interest margin, or NIM, which is basically how much money they make on their loans, is sitting at a very healthy 3.59%. You pair that with a really strong capital ratio of 11.8%. Think of that as their financial safety cushion, and it tells you management has a solid foundation to work from. So they've got this strong foundation. The big question is, what are they going to build on it this year? Let's get into their guidance, because this is where the conversation shifts from the past to the future. And right away, management lays out a pretty confident game plan. They spent last year cleaning up their loan portfolio, and now they're saying we're getting back to our normal growth rate, which is in that mid-single-digit range. You know, the rest of the numbers here, they point to a pretty stable and predictable year ahead. The CEO, Curt Myers, really set the tone here. He called 2025 a record year, pointing to that new high on operating EPS of $2.16. The whole vibe was one of, hey, we executed our plan perfectly, and that's setting us up for what's next. Now, hold on. Before we jump into their big strategic play, we got to quickly talk about this term earnings accretion. When one company buys another, this is the magic number. It's the instant boost the deal is supposed to give to earnings per share. It's basically how Wall Street keeps score on whether an acquisition is a financial win right out of the gate. And this is why that term is so important right now. The Blue Foundry acquisition, this is the absolute centerpiece of their growth story for 2026. It's a textbook move to expand their turf, adding scale in some really attractive markets in New Jersey. But for investors, the key number is right there at the bottom. They're projecting this deal will boost earnings by more than 5% in the very first year. That's a big deal. Okay, so that's the company's story. But of course, no company lives in a bubble. So let's zoom out for a second and see what kind of economic environment they're dealing with. This is really the question every investor has to ask, right? Especially in a sector like regional banking. Are you buying a company that's truly special, or are you just sort of riding the wave with the rest of the industry? And what's fascinating is that over the last 3 months, Fulton stock has performed almost exactly in line with the KRE, which is the big ETF that tracks all the regional banks. So what that tells us is, for now, the stock is just moving with the sector, catching the same tailwinds as everyone else. So Fulton's playing on the same field as its competitors. Their guidance, just like everyone else's, has a Fed rate cut baked in. Everyone is watching credit quality like a hawk. And for a lot of these banks, real growth is coming from buying other banks, not just from their day-to-day business. All right, so we've looked at the quarter, we've unpacked the guidance, we've checked out the broader context. So what's the bottom line? Where do we think this stock is headed? It's time for our call. We are initiating coverage of Fulton Financial with an outperform rating. Why? Because we see a really clear and well-communicated plan for growing earnings. And it's all built around a solid acquisition that we don't think is fully baked into the stock price just yet. We're calling this a prove-it story. Basically, the trade idea here is a bet on their ability to execute. The biggest thing to watch is the close and integration of that Blue Foundry deal in the second quarter. If they nail it, that earnings boost they talked about becomes real, and we see the stock slowly but surely grinding its way up. The risk? It's pretty simple. If that deal gets delayed or the integration is messy, this whole story could stall out. And really, it all boils down to this single question. The strategy is solid. The market has given them the benefit of the doubt so far. But now comes the hard part, actually doing it. For Fulton Financial, 2026 is all about turning a great plan into great results. This is not financial advice.